most CEOs I talk to would say we are probably in a recession right now. Right now.
Turn your TV on. March Madness is just like Rome. Free bread, free circus.
Would say we are probably in a recession right now. A couple of airline CEOs told me. One CEO specifically said, the airline industry is like the proverbial bird in a coal mine, canary in the coal mine, and I was told that the canary is sick already. If you look at what's going on in air traffic and how people are changing and how so many people who, like Canadians who are not coming to the United States, we're seeing in various different sectors a real downturn.
Yields and weakening the dollar. That's a theory that has some purchase right now.
Well, I do believe the dollar will be weakened. I mean, most political theory is, or economic theory is, tariffs raise the value of the currency. I think it's going to weaken the dollar. Look, one thing I would say with certain, the economy is weakening as we speak. And so the need for the administration to focus on these pro-growth agendas, which was much of what the president campaigned on, we have to get that going. Whatever it's the tax cut, we need to be deregulating. We need to be streamlining permitting. Exactly all the things I've been writing about, where we need to get the private capital, private markets to start investing in the United States. We need to, and I think right now the market's not focusing on all these. We forgot about the power of AI, the power of all these different changes. We're focusing on the market. But the macro trends of AI, the macro trends of rebuilding our infrastructure, these macro, and if the president is successful in deregulating, if he's successful in streamlining permitting, then we could go back to this view that we have a major growth agenda in front of us. The president has been focusing on right now areas that, in my mind, in the short run, are very inflationary and destabilizing the economy, and that's what we've been talking about. But if we can find ways of rebuilding growth through these agendas, and then as I said at the beginning, the market declines. We're going to look back and say this might be a good entry level to get back into the market.
We're super excited about BlackRock bringing their Bitrue product, which is one of the flagship money market funds in the industry, to Solana. Solana, we've been working on partnering with institutions for quite a while now, because I think that our vision for what blockchains are is that it should be global financial infrastructure that bring all of the assets available to people around the world that have access to the internet. And so that is something that we're super excited about, because BlackRock, household name, fantastic product, and being able to make that available to the world of people who are using on-chain DeFi.
Questions over the last, I would say, decade or so is the increase in correlation between asset classes. And there was a time where you would have a definite different results between fixed income and equity. We've seen a convergence of the results there. That's been one of the big questions with respect to crypto. Is this a new asset class that will have uncorrelated returns, or at least a greater amount of uncorrelation that you see in the public markets right now?
And then the other question I think has to do with what might be described as the shadow banking system. So much of the credit in America has moved off balance sheet from the big banks to what's called private credit. So the Apollos, the Blackstones, the BlackRock, all sorts of folks who are not necessarily regulated the same way that the banking system has been. But they all have connections in one way or another to the sort of regulated banking system, and how you think about that.
Well, there's a very big difference between a lot of these private credit shops and the regulated banking industry, in the sense that many of them are fully funded in essence by equity pieces, by long-term investors. In some ways, the liquidity mismatch that one might have in the banking area can be less of a factor for private credit funds. Now, with respect to the interlinks between the fund industry and the banking industry, that's one reason why the banking regulators are there. They have prudential authority over bank lending arrangements. They also have prudential authority in terms of other aspects like payments. So therefore, we rely on the banking regulators to make sure that we do not have at least systemic issues on the banking side of the house.
I think somebody's going to go bankrupt here. with this kind of volatility in the Mag 7 going straight up and then straight down, and I look at a 1-year scoreboard, and everything is flat or down except for gold and Bitcoin, and maybe the Dixie is flat too. But when you have these types of moves, usually somebody goes bankrupt before the thing ends, and that's probably a leveraged investor. I don't have any candidates or anything like that. This type of thing usually ends with forced liquidations, and I think they started last week, and certainly there was indications of that this morning. So there's going to be more deleveraging, I think, and the Fed is really not in a position to reverse course or resume rate cuts, because the inflationary consequences of what we've seen in recent data, soft data, admittedly, but things like the University of Michigan inflation expectations for the next 1 year and the break-evens from the TIPS market and some other indications, people are looking for inflation of kind of very opposite of what the Fed is hoping for. I mean, the University of Michigan one's up at around 4 or 5% for the next year. You can't have this tension in the dual mandate is causing a problem. They can't loosen up because of inflation concerns, and tariff concerns obviously compound that. And yet you have what looks to be rising probabilities of recession across all of Wall Street's predictions. Under 3 weeks ago on Fed Day, day after Fed Day is when we spoke, I told you that I thought there was a 60% chance of recession. I thought that was way out of line with consensus. I think it was more like around 30 or 30, maybe 35 for the consensus. But I just saw on the screen today on your network that I think the consensus is up to 55%. Yeah. And I think I can only raise my 60%. So it doesn't really matter. It's just the odds favor a recession at this point. It's kind of hard to see how we avoid it. And that will lead to, we have this herd mentality or kind of human nature thing from what might happen when earnings come in. We might start to get these. It's okay to miss with a crowd of people that are missing. It's bad if everybody else is beating and you're missing. But if everybody else is missing or lowering, then it's okay for you to lower, which means you get a kind of a psychological circle going around where it's okay to say, that we're having difficulties. We might be laying some people off. It's kind of like when we had supply chain problems during COVID. It was okay to bring that up. Supply chain problems are hurting our company and causing us to raise prices and things like that. That could happen with tariffs being substituted for supply chain problems. So I've been saying that the market was just ridiculously overvalued going to 2025. I mean, the CAPE ratio on the S&P 500 PE was something like 38, which is just unheard of. It's only happened like once or twice before, and was the second highest CAPE ratio ever, and we're still at around 35. We started so overvalued on junk bonds. The spreads were so tight, and the CAPE ratio was so high. There's just a lot of room for this to normalize. We've already seen, as I said moments ago, we've already seen junk bonds versus treasuries go to kind of normal valuations from very overvalued. And I would expect that since junk bond behavior and equity behavior tend to be very highly correlated, it might be a tell that we could see valuations on equities become more normalized, which is a long way down from 35 CAPE ratio. Well, so I've been looking for 4,500 on the S&P. Okay. I've been looking for that ever since we broke down back earlier in the year, and I'm sort of looking for 4,500. I think we should be able to get a durable counter trade off of 4,500.
Good morning, guys. That's right. We heard from the UK luxury car maker Jaguar Land Rover over the weekend that they're going to be halting shipments of their cars to the United States for the month of April. The company says this is a short-term action while they assess their medium and long-term plans. JLR, which is owned by Tata Motors, is highly exposed to the U.S. market. It generates 1/4 of its sales in the U.S. but has no manufacturing capabilities here. So JLR is poised to be impacted very severely severely by these new tariffs. And we're seeing similar lines of thinking from other automakers in Europe as they try to assess the impact here. Just this afternoon, we heard that Volkswagen's Audi is holding back cars that arrive in the U.S. ports after April 2nd, again, while they assess what to do medium long term.
How much of those types of export-heavy companies are in the K-Web?
I mean,
versus domestic?
Zero.
And so the K-Web is all domestic China.
It's domestic China.
The tariffs won't hurt domestic China because they don't really, I hate to say it, folks, they don't really buy much of our stuff.
No.
It's about the GDP of the state of Nebraska total for China.
Oh, I mean, Washington State because of Boeing, Texas because of LNG and oil, and certainly the Midwest because
and
of
energy is untariffed, by the way.
Correct. So I think there's an opportunity. I actually think there's an opportunity for an off-ramp. I think the push on the TikTok, the another 75-day stay, as well as you have China's actually doing what President Trump said, which is raise domestic consumption, and they're actually spoke about that today.
Welcome to the Crypto Teacher, and you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And also, guys, make sure you go like and follow the TikTok. More videos to come. And while the sheep are getting a free bread and free circus, we have BlackRock's Larry Fink says what? We're in a recession. It's already here. And you heard it from the horse's mouth. And then also he said what the Crypto Teacher has been telling you, the dollar is going to get weaker. And guys, we know they want to get us to this level playing field. We're going to lose that world reserve currency because we have countries already moving off the dollar. It's just the Fed and the big banks are holding us up. And remember, the Crypto Teacher told you. Now we have BlackRock's better on Solana. And we know DeFi is definitely the new banking. And Bitcoin and crypto is moving lockstep with stocks. Why, guys? Because the Fed controls both. We know every cycle the Fed prints all this money, stocks and cryptos pump. And when they start shrinking liquidity, we know they dump. And right now it's time to shrink because it's time to build. And remember, the Crypto Teacher told you. And we have Gunlack says it's time for bankruptcies and a recession is coming. And again, we're in a great depression, not a recession. We have Jaguar Land Rover to pause shipments to the U.S. for 1 month. And we know that's going to interrupt the supply chain. And once you start it back up, it takes time. And all this is going to do is increase prices. And remember, the Crypto Teacher told you. And these tariffs will not hurt China. You heard it out the horse's mouth again. And also, don't forget, China has already started moving their goods to bypass tariffs. So what's going to happen? And remember, the Crypto Teacher told you first. They're going to bring in blockchain. Because blockchain, you can't get around it. They'll know exactly where this item came from. And remember, the Crypto Teacher told you. And we have Trump on tariff negotiations coming. And he brings up Japan. Guys, don't forget, Japan owns a lot of United States debt. And we know once Japan get into this rate hike cycle, which nobody's talking about anymore, we know it's going to send another rumble through this economy. They eventually are going to have to start raising rates. And don't forget, Japan leaders were brought to San Francisco to plan out this fourth industrial revolution. Never forget, this is a plan. It moves in phases. And we have Trump on China. We'll put an additional 50% on China if they don't remove the 34%. So we can clearly see a trade war is coming. And that means the drums are right around the corner. Trade war, currency war is all about to be stepped up. And the Fed will allow the trade war to crush the U.S. economy, and then they'll come in. We know they cause a problem, wait for the reaction, and run in with a solution. But this job market have to start collapsing, and that will happen soon. But that's the only reason why they're going to come in. And down the road, that's the reason why universal basic income is going to be so important. And we have AI and the Mag 7 has lost trillions in weeks. And again, we know it's time to build. And first quarter earnings will bring in trading, whether they're short or longing. So money is definitely going to come back into the market. And remember, the crypto teacher told you. And we have Netanyahu at the White House speaking with Trump on March Madness Day. So everyone is distracted. Building is happening. And Netanyahu speaks about tariffs, but guys, don't forget, the U.S. gives Israel billions. And then also Trump is asked about Gaza. Speaks about it like it's just a regular piece of prime real estate, making a mockery of Holy Land. And we know you're just not going to take someone's land. We know the drums are going to get louder. But don't forget, the banks fund both sides to move an agenda. And this time it's the fourth industrial revolution. Whether robots, algorithms, and drones take the economy over, pay each other with crypto, and the sheep go inside the metaverse. And remember, the crypto teacher told you. Because he knows, when it comes to the NWO, it's all planned out. You have a wonderful day.
We're not looking at that. We have many countries that are coming to negotiate deals with us, and they're going to be fair deals. And in certain cases, they're going to be paying substantial tariffs. There'll be fair deals. As you know, I spoke this morning with the Prime Minister of Japan, and we had a very good conversation. They're coming. And I said, one thing, you're going to have to open up your country, because we sold no cars, like 0 cars in Japan, and they sold millions of cars into our country. They don't really take our agriculture, a little bit of it just to keep us slightly happy, but they don't take what they're supposed to be taking. So we have a great relationship with Japan. We're going to keep it that way, but they're coming in to meet, and other countries are coming in. With China, as you know, against my statement, they put a 34% tariff on above what their ridiculous tariffs were already. And I said, if that tariff isn't removed by tomorrow at 12 o'clock, we're putting a 50% tariff on above the tariffs that we put on. So they've gone for years. They've become a rich country because of people, again, that were in the White House that allowed this to happen. Hundreds of billions of dollars a year they'd make on us on trade, and it shouldn't be that way. And I have a great relationship with President Xi. I hope it's going to stay that way. I have great respect for China. But they can't do this. We're going to have one shot at this, and no other president's going to do this, what I'm doing. And I'll tell you what, it's an honor to do it, because we have been just destroyed, what they've done to our system. You know, we have $36 trillion of debt for a reason. And the reason is that people allowed it to get that way. So we'll be talking to China. We'll be talking to a lot of different countries. And I think, you know, if we can make a really fair deal and a good deal for the United States, not a good deal for others. This is America first. It's now America first. And we didn't put America first. We put America last. The people that were in the Oval Office put America last, and we're not going to stand for it.
Well, you know, the Fed can be much faster moving, and I've often advocated them to be much faster moving than they did. They can make changes intermeeting. There's nothing that restricts them from doing that. And, you know, so, you know, if Trump, in fact, does reverse himself, they can reverse themselves also. You know, they don't have to be a slow-moving boat like the Titanic, like people think. They can move quickly, and they should respond. The interesting thing is that some of the near-term data might not be that weak, because we know there's a lot of advanced buying on the tariffs. So we may have to wait, you know, a few weeks or even a month before we really begin to see some of that data that he is looking for. And by then, you know, that I'm not saying it's too late, but you know, that would hamper his ability to offset the coming recession.
The AI fueled gains of the last year. And in fact, Google and Microsoft, those valuations are now barely higher than their 2022 lows before ChatGPT even kicked off the trade, meaning that even the mega cap AI premium is close to being eroded here. NVIDIA's already there. 20 times forward earnings is a lower multiple for NVIDIA than both its 2022 and COVID lows, as if the AI trade never even happened. Now, last week, we talked about the impact of tariffs on data centers, which hinges on a steady supply of chips, networking hardware, and raw materials key to AI. Beyond that, though, there's already mixed momentum in the space. Over the weekend, Meta released a new Llama model, but Sam Altman, he also warned that ChatGPT 5 will be delayed. So if investors were already growing skeptical of the trade, tariffs could give them even more reason to get out or pause. Now, a catalyst for the mega cap and AI trade this week, that may come from Google's next cloud event just a few days from now.
Yeah, if you and I were running a company, CEO, CFO, we report next week. We're having
who's who?
You were the CEO. You see how I did that? I
making sure.
Yeah, I was clear. But we would be having a conversation about what should we guide to make sure we don't foul up this July earnings guidance. The skew to that's got to be the negative. Why would we set the bar high where we can't meet it with all this uncertainty? We don't know what our consumers are saying. We don't know the capex of our customers. They know they're going to keep cybersecurity and nothing else. I mean, we're worried. So we're going to set the bar low and hope the market digest it. We have no choice. So I'm worried that the guidance will be bad.
President Trump and President Benjamin Netanyahu of Israel. The President of the United States saying he is not considering any type of pause in terms of tariffs going forward, and in fact doubling down on his threat to impose an additional 50% tariff on China if that country doesn't lower its retaliatory 34% tariffs on the United States. So the president here holding a firm line and explaining that he feels that he has a once-in-a-generation shot here to reset the global trade table, as he put it, in terms of the U.S. Relationship with countries around the world. Interestingly, Morgan, in this Oval Office session with Benjamin Netanyahu, the Israeli prime minister said that Israel is committing to President Trump that it is going to lower its or eliminate its trade deficit with the United States. So the implication there is Israel is going to find some way to buy a lot of American stuff and do that pretty soon. And what President Trump is saying here is that what he wants is other countries to come to him to negotiate. And in order to negotiate, what he wants them to do is to come down to zero in terms of tariffs and then go below that in terms of what they call non-monetary tariffs or non-monetary barriers to trade. So the president here putting down a pretty hard line here, but saying he's simultaneously looking to raise revenue with these tariffs and have them be permanent while also engaging in negotiations.
Mr. President, I want to first thank you for inviting me again to the White House. You've been a remarkable friend of the state of Israel. You stand by us. You're standing with us. You are a great, great champion of our lives. And you actually do things that you say you do. And I think that people respect that enormously. I certainly do, and the people of Israel do, and I think the Jewish people do as well. We just saw your representative in the Department of Justice fighting anti-Semitism, standing up for Israel in international forums. I just want you to know from the heart, it's deeply, deeply appreciated. As you said, we had the opportunity to talk today about many subjects. First, if I can mention tariffs, it's a subject of some interest today. I can tell you that I said to the President a very simple thing. We will eliminate the trade deficit with the United States. We intend to do it very quickly. We think it's the right thing to do. And we're going to also eliminate trade barriers, a variety of trade barriers that have been put up unnecessarily. And I think Israel can serve as a model for many countries who ought to do the same. I recognize the position of the United States. It says, we're allowing other countries to put tariffs on us, but we don't put tariffs on them. And, I'm a free trade champion, and free trade has to be fair trade. And I think that's basically the position that you have put forward, Mr. President. We are going to eliminate the tariffs, and rapidly.
Friends of the Times of Israel, the IDF is fighting again in the Gaza Strip. I myself might be called up in a month. Do you think that's the way to pressure Hamas to get to a deal? And do you think blocking humanitarian aid is also an effective pressure?
Well, you know how I feel about the Gaza Strip. I think it's an incredible piece of important real estate, and I think it's something that we would be involved in. But having a peace force like the United States there, controlling and owning the Gaza Strip would be a good thing. Because right now, all it is for years and years, all I hear about is killing and Hamas and problems. And if you take the people, the Palestinians, and move them around to different countries, and you have plenty of countries that will do that, and you really have a freedom zone. You call it the freedom zone, a free zone, a zone where people aren't going to be killed every day. That's a hell of a place. It's you know what I call it, a great location that nobody wants to live in, because they really don't. And when they have good living, real living, where Hamas and all of the problems they have, the level of death on the Gaza Strip is just incredible. And I've said it. I don't understand why Israel ever gave it up. Israel owned it. It wasn't this man, so I can say it. He wouldn't have given it up. I know him very well. There's no way. They took oceanfront property and they gave it to people for peace. How did that work out? Not good.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told his members that this has been part of the reason here that the system is kind of clogged up, if you will. During that auction that we saw a little bit before, the attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets. Now,
it was not just a poor auction; it was absolutely lousy. And you know, when the dealers have to step in to save a Treasury auction, that's a rare occurrence.
Cryptoteacher and the New World Order book, plus the 3 Kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.